Hello and welcome to TalentSprint again. In this video, we are going to discuss a matter of grave and current importance to the Indian economy, that is called money laundering. Money laundering has often been talked about in various forums, in the public, in the social media, in the print media and on television, etc. So we shall take a little detailed look on what is money laundering, how it can be prevented, what are the steps taken by the government to prevent money laundering, what are the provisions of the act which penalize people for money laundering, and how these money laundering can be prevented. What is money laundering? Money laundering is nothing but the concealment of the origins of illegally obtained money. The concealment of the origins of illegally obtained money, typically by means of transfers involving foreign banks or illegitimate businesses. We have to understand a couple of things here. One is that it is called the concealment. That means money laundering does not reveal the original source of the money. So it is concealment. The very name money laundering itself indicates that it's an illegal activity. So one of the predominant nature of this illegal activity is the concealment of the origins of illegally obtained money. The origins of illegally obtained money, which means that the money which has been got is obtained by illegal means of sources. Typically by means of transfers involving foreign banks or sometimes even legitimate businesses. There could be a source of legitimate business, but the money could have been concealed. The money could have been transferred, typically using foreign banks. The money laundering is normally associated with international money transfer. It is not that it cannot be done within India. Within India also it can be done. Money laundering is a source of great worry to the Indian government, even as far as domestic transactions go. But more often than not, money laundering is associated with international transactions. So typically the foreign banks are involved. It is not that the money could be obtained from illegitimate businesses. Even through legitimate businesses, the money can be obtained. But when the source of money is concealed and the money is transferred to another person through illegal means, that is called money laundering. So it is not necessary that it should be only through legitimate businesses. It is most important that to understand money laundering, we must understand that it means concealment of money or concealment of the source of money. Concealment of the source of money, and it is illegally obtained money. I'll give you an example. Just to give you an example, it is a hypothetical case. It need not be so simple in actual practice. But let's assume, for example, a person is residing in the United States of America and he is doing a legitimate business there. He is doing a legitimate business there, the one which is permitted by the laws of the United States. And he fears that if he wants to keep the money in the United States itself, he may be taxed a lot. So what he does is he involves a foreign bank and transfers the money to another person, let's say his brother or his father or his close friend, to a person in India. And that person in India does not reveal the source of that income. That is called money laundering. It's a very simple example of money laundering. In actual practice, there are far more complicated methods. There are far more complications involved in money laundering. But what I have just given you is a very simple case of money laundering. A person doing a legitimate business in the United States of America transfers money to his father, brother, or a friend or a relative, and that person who receives the money into his bank account does not reveal the source from which it is received. Or, in other words, he receives the money through channels not involving a bank. That could also be a case. Supposing the person in the United States transfers money to another person in India, and that person in India gives, let's say, cash to the ultimate beneficiary of the fund, that is also called money laundering. So money laundering is a concealment of the origins of illegally obtained money. typically by means of involving foreign banks and through legitimate or illegitimate businesses. Enactment of a law which was enacted in 2002 is called the Prevention of Money Laundering Act. The Prevention of Money Laundering Act was an act passed by the Parliament of India in 2002, and this act is called the Prevention of Money Laundering Act of 2002. The main objective of this act are to prevent money laundering and as well as to provide for certain punishment. This punishment could range from confiscation of the property either derived from or involved in money laundering. It's important to note that the offences are committed with a view to concealment of the origin of income. So which means that when I am not interested in showing my origin of income, and when I do not show that income in my income tax returns, then I involve myself in money laundering. And when I do an illegal activity, as money laundering is, then I deserve to be punished. And the punishment could range from confiscation of the property either involved in or derived from money laundering. Supposing I bought a house with that money which has been illegally transferred to me, then the house can be confiscated. Or I have bought a high-end luxury car, then the car can be confiscated. Or if the money is lying with me, the money itself can be confiscated. So the act the act aims to prevent money laundering in whatever form that can happen. The provisions of the act are frequently reviewed from time to time, and various amendments have been passed from time to time. The act was originally passed in 2002, but they always say the thief is wiser than the police. So the people involved in money laundering have invented very ingenious methods of money laundering, and in order to keep pace with them, this Prevention of Money Laundering Act of 2002 has been amended from time to time, and various amendments have been issued in this act itself. What are these amendments? What are the key provisions of this Money Laundering Act and the amendments that have been made subsequent to it? One of the first key provisions is that the banks must record all transactions over 10 lakh rupees. Banks must record all transactions over 10 lakh rupees, which means that if anybody in the country, whether he be a legitimate person, he be a legal law-abiding citizen or otherwise, if he transacts in his account for an amount of over 10 lakhs, then the transactions should be recorded by the bank. And this record must be maintained by the bank for a period of 10 years. Supposing, let's for example say that I've sold a house property. I'm a law-abiding citizen of India, resident of this country, and I had built a property through legitimate means, and this property has now been sold to a third party. And I get money in consideration of that which I have legally deposited into the bank account. Even then, the bank must maintain a record of this transaction if it is above 10 lakhs, and such records must be maintained for a period of 10 years from the date of the transaction. Banks must also make cash transaction reports, that is CTRs, and suspicious transactions of over 10 lakhs. Whenever there is a cash transaction of over 10 lakh of rupees, and whenever a person deposits cash into his account or withdraws cash from his account for over 10 lakh rupees, this must be reported to the Reserve Bank of India. Not only that, any suspicious transactions which can happen in a person's account must be reported at periodical intervals to the Reserve Bank of India as per the provisions of the PML Act, or the Prevention of Money Laundering Act of 2002, as amended from time to time. And these must be reported within 7 days of such transactions happening. The transactions of over 10 lakh rupees, the suspicious transactions, and cash transactions of over 10 lakh rupees are to be reported within 7 days of the transactions happening to the Enforcement Directorate and the IT department through the RBI. So any cash transaction of over 10 lakhs, any suspicious transaction of over 10 lakhs, and any cash transaction of over 10 lakh rupees have to be reported to the Enforcement Directorate and the IT department by the bank concerned through the Reserve Bank of India. That is the key provision of the Money Laundering Act, Prevention of Money Laundering Act of 2002. What are the punishment for money laundering? Having seen that Prevention of Money Laundering Act has involved certain stringent provisions on behalf of the banks to report them, we must also understand what are the punishments for the money launderers, as they are called. Any person found guilty of money laundering shall be punishable with rigorous imprisonment with periods of ranging from 3 to 7 years. Any person who is found guilty of money laundering will be punishable with rigorous imprisonment for a period from 3 to 7 years. It depends on the nature of the offence committed and the view taken by the judges. In extreme cases, the imprisonment can also be extended to 10 years. So it's in actual practice or in actual fact, the rigorous imprisonment for money laundering can extend from 3 to 10 years depending on the nature of the case and depending on the severity of the crime committed. Appropriate authorities can provisionally attach property believed to be the proceeds of the crime for a period of 180 days. Such an order is required to be confirmed by the independent adjudicating authority. So not only can the person convicted of money laundering be imprisoned for a period from 3 to 10 years, his property can also be confiscated for a period of up to 180 days. And this order is required to be confirmed by a competent adjudicating authority, which means that the person who is convicted of money laundering can appeal to the adjudicating authority, and the adjudicating authority will decide what is the level of punishment which is to be given and whether the confiscation of property is to be done only for a period of 180 days or more. So this is how the prevention of money laundering is effected by the government of India. This is indeed a very serious crime, a crime which has involved thousands of crores of rupees, some of them detected by the government authorities like RBI, banks, Enforcement Directorate and the IT department. Perhaps quite a few of them have been undetected so far. One of the other methods of money laundering is what is known as the Hawala transactions. Hawala transactions are those which do not pass through any banking channel. These do not pass through any banking channel. A Hawala transaction is normally carried out in cash. One of the best examples of a Hawala transaction could be that a person living, let's say, in London, goes to the airport, meets a person of Indian origin, tells him that, look here, I'm going to give you 1,000 British pounds. And you go and hand it over to a person in India. And that person in India will give you a commission. This is a typical example of a Hawala transaction. The person of Indian origin, he flies from London with that 1,000 pounds, successfully manages to evade customs authorities, and then he hands over that 1,000 pounds to a person in India and gets a commission for that, which means that 1,000 pounds does not go through the banking channel at all. It is being received in cash and then handed over in cash, and that is called a Hawala transaction. That is also a case of money laundering only. But Hawala transactions, since they do not go through the banking channel, the Prevention of Money Laundering Act cannot be applied to them very strictly because they often go unnoticed. The best way of controlling or punishing these offences is when the person who is about to commit the crime of handing over the cash is apprehended red-handed. Is apprehended or caught red-handed. Many times we have seen that people come from abroad, they carry unaccounted cash, they are caught in the customs. They carry unaccounted gold, they carry unaccounted diamonds, they carry unaccounted whatever goods which are on which customs duty is to be paid. But sometimes these persons go scot-free, sometimes or many times perhaps, thanks to the efficiency of our customs department, many times such travelers are caught and then a big penalty is imposed on them. That big penalty is imposed on them is also a means of preventing money laundering. So money laundering is a grave crime and one must support the government in all its efforts to prevent money laundering for two reasons. One, this is a crime and must be stopped. And number two, it can lead to a lot of loss of revenue for the government. For example, when gold is smuggled into the country, when I use the word smuggled, that itself means that it is done illegally. When gold is smuggled into the country, the government loses thousands of rupees by way of evasion of customs duty. Or when a person brings cash and hands it over to another person, the government loses substantial money by way of foreign exchange. So all these must be stopped, and it's the duty of every law-abiding citizen to prevent money laundering. And the government, on its part, has passed the Prevention of Money Laundering Act of 2002 and amended it from time to time. It provides for very strict punishment, as we have seen. It provides for imprisonment from 3 to 10 years, 3 to 7 years normally, and in extreme cases 3 to 10 years. It also provides for confiscation of the property, and it provides for severe punishment of people who are caught bringing contraband goods into the country. Contraband goods are those goods which are illegally brought into the country and which are legally not allowed inside the country. For example, narcotic substances. What is a narcotic substance? The substance which gives a person a high after consuming them. So for example, marijuana. Marijuana is not legally allowed in India, or what is locally known as ganja. That is not allowed in India. So when a person brings marijuana into the country, he brings contraband goods, and if he is caught, then he is imprisoned immediately. On the other hand, gold is not an item which is banned in India, but when you bring in gold, you have to pay the customs a customs duty. You have to pay the government a customs duty, and if you do not do so, then you are evading customs and indirectly doing money laundering. Money need not be in the form of cash alone. It can be in the form of goods also. When the goods are dutiable, the duty has to be paid, and if the duty is not paid, then it amounts to money laundering. Of course, bringing in contraband articles is altogether a different subject. Then it becomes a crime. It becomes a criminal act. A criminal act is always punishable with imprisonment. So this is the introduction about, this is the brief account of money laundering and what the government has done to prevent money laundering in our country. I hope you enjoyed this presentation, and until I see you in the next video, is bye from me for now. Thanks for watching.